Welcome back, Alpha Hunters. The markets are closed for the week of April the 12th. So let's go ahead and talk about what went on this week because it was kind of sleepy and then it got to kind of a roller coaster. Monday didn't really do too much, okay? We had the solar eclipse was going through the US. A lot of people taking their time, go check it out. And we didn't really do too much. We had a little bit of a higher open, a little bit of a pump, a little bit of a drop, kind of just flat, not too much going on. The thing that was kind of weirdly significant about Monday was that it was the lowest volume day that we've had since, what was that, Thursday, the Friday after Thanksgiving, or Black Friday. So, and the difference between Black Friday and this past Monday, well, that is, well, Black Friday is a half a day, and this past Monday was a full day of trading. So kind of just tells you how much people kind of took the time off, see something that went across the U.S. Solar eclipse. So that was kind of neat. Anyways, we then gapped up on Tuesday, traded down first hour, 15 minutes or so. Pretty good trade down there. Then we bounced, kind of rallied as we went towards the close of the day. A little bit of a sell down there, kind of midday, but bounced pretty hard there on Tuesday at the end of the day. And one of the reasons why we did kind of have a whipsaw day there Tuesday was because we got CPI Wednesday. We did gap down about 1.1% on the market Wednesday, and CPI came in a little bit heavy. Not horribly high, but it was a little bit higher than forecast. So it doesn't sound great for having rate cuts happening later in the year. So that was kind of why we were seeing the market trade down there on Wednesday, and it kind of just stayed at that kind of lower level pretty much throughout the day. Not too crazy of movement there intraday. We also got FOMC minutes there midday. That's why you also see some volatility pick up there midday. So yeah, they made some comments about not being too confident about rate cuts going forward. They're going to say the same thing of we need to see more data. So I'm not really too big on the Fed minutes. A little bit of a gap up there on Thursday. We got PPI Thursday morning, and it also came in a little bit higher than expected, but we traded down initially. We took the low from Wednesday very quickly there. Didn't really hold too much, but then went on a pretty good rally there for most of the day, and then kind of settled out towards the end of the day and a little bit of a drop there going into the close, but ended up pretty good on the day. And then Friday, we finally are starting to get the earnings. Had a pretty good gap down here of 0.7% on the market. A little bit of a pump there on the start. And then we just dropped off. You can see this 30 or 45 minute here, this evening star reversal kind of form out there in the first 45 minutes. And yeah, there you go. You can even play that on the retest later on. As we retested it, kind of go into the middle part of the day, retested right into the bottom of the evening star, and then just dropped off. Nice little double bottom down here towards the end of the day. See if that continues. Maybe we bounce there on Monday. But week over week, it was kind of a bearish one as we did wind up dropping roughly 1.5% on the week. And we'll see what happens going into next week. But yields, we'll get into, had a great, strong week. Gold had a pretty good week. And the market didn't trade all that well. Qs actually didn't trade too bad, but we'll get into all that kind of stuff. All right, taking a look here at sector performance for the week. And yeah, I mean, things moved throughout this week. I'm not going to say they weren't, so it's going to be kind of hard to track kind of everything, how it flowed throughout the week. The one thing I would say is tech did really good there on Thursday and kind of held that in Friday. So tech did pretty good to end out the week. Discretionaries also did well. Staples, communications, utilities kind of coming in line with the market there. Underperformers for the week, energies really dropped off there on Friday. After they gapped up on Friday, they sold off pretty good. Industrials also underperforming. Real estate, healthcare, materials, and financials, the big lagger for the week. Really got hit there on Friday with some of those financial company earnings early Friday morning. So yeah, didn't do them justice. Okay, take a look here at the VIX. Well, the VIX is starting to wake up here a little bit. Be a little bit cautious here as, yeah, we're starting to see the VIX. Last week we saw it kind of had a nice little run up. Definitely continued this week, especially on Friday. Definitely the highest close we've had going all the way back to the beginning of November. So, yeah, I would be a little bit cautious here on the market. Starting to be a little bit like, okay, something might be brewing, but still haven't seen some crazy, elevated levels yet. I mean, it did just close in roughly the 17 area, but it did get up to above 19, and I can't imagine it spikes up this next week, but it might just, continue higher as we trade down on the market. But I would just be looking for the caution. All right, take a look here at the DXY, that dollar index. And kind of last week, I mentioned you can kind of play this, whatever, this lower wick and this upper wick, as that would be kind of my idea. But I wanted to see it close above either one. Well, Tuesday, we actually got below that last Thursday lower wick, but we didn't close. We just came down, we snagged that hammer, and it kind of formed what looked like it could be a double bottom. And then the next day, Wednesday, I mean, you see it. I mean, CPI, when we got that data, dollar just took off and hasn't really looked back. I mean, did have a little bit of a rest day there on Thursday, but man, Friday just continued as well. That looks very strong. Looks, yeah, I mean, DXY dollar looking very, very strong. As far as where it goes now, well, right here, right now, I would not want to be bullish. If you're in bullish, I would just say, hey, you can take it off the table, wait a couple days, because it's not too often it gets that deviated far away from kind of the moving averages. You just kind of go back and look at some previous trend moves. It just hugs the moving averages. Just hugs these moving averages. So the fact that it's this far away from the moving averages, even if it continues up for maybe a couple days, maybe like how it did back over here in September, you get that one quick snapback day here sometime this next week, and the moving averages come up maybe like on Wednesday or Thursday. That might be a better buying opportunity than right now, because you don't want to get caught with a snapback Monday or Tuesday. So I would be quite a bit more protective on gains here on the dollar. Take it off the table. I do like the trend though. If you do get the pullback, I'd want to be bullish. All right, take a look here at gold GLD and the GC futures. Let's take a look at the GC futures. Oh man, we had quite a bit of volume. Kind of looks like a blow off the top. Huge upper wick here on the futures side, but even silver has a lot of volume coming in on it on Friday. Guys, I mean, it's been on one heck of a run here for the past month and a half. I could definitely see it resting. I mean, we just saw the dollar. If the dollar's pushing up super strong, gold and precious metals might be taking a rest, right? This is a price in dollars. So if dollars are going higher, I mean, these commodities should be going lower. Really, the fact that they kind of haven't here over the past couple days, kind of, maybe they are due for one. Okay, so I'm gonna remain a gold bull on any kind of pullbacks, but it might be due for one here. So don't be surprised by it, and you're probably just gonna be looking for good entry points. All right, take a look at yields. 10-year yield, man. I love talking about some yields. Actually, I can't stand it, but I think it's just a really important part of the market right now. Well, this week, man, we know how bullish last week was on yields. Yields came out and ripped last week. This week kind of had an early week rest. We got to Wednesday, we got the CPI, and they just popped really hard. Got the follow through on Thursday, which is very important. You always want to see the follow through day, the day after a huge pop, and you got it. You got the follow through day, so we continued higher. You got a little bit of potentially a shaving top here for Thursday, Friday, coming back down. I think it's more of just going to be a rest, kind of like on pullback on yields, probably just chop sideways. I wouldn't really be thinking like that's going to be a reverse or anything like that. And yeah, it's hard for me to see where yields go lower. Inflation data here over the past 2 to 3 months has continued to trend higher, and that's not good for rate cuts. And then you also got to question investors. Are they willing to keep holding at U.S. debt at low rates? So I don't know if that's going to be true. We'll find out. I don't think they would. Investors are going to want to do that, especially with how high the debt to GDP is. So things could be shifting, which this is a big shift. This could be the biggest shift actually in the market that we haven't seen really in about 40, 50, 60 years. And this is the one area I think that the stock market could really see a lot of damage from. And if yields continue to go higher, which I'd imagine they probably do, even if they do rest here on the near term, eventually the stock market's going to have to price that in, and that's going to be the problem. Take a look at the 10-2 inversion. Still looks like it's just basing in here. Okay, still looks like it's just basing. Thought maybe it's going to break higher here past couple of weeks. This week came back down. Nice little bullish engulfing there on Thursday over Wednesday. But I mean, it's just a relationship kind of chart. So, and until we kind of break these lows, I'd imagine it's probably just basing in here. Probably starts to continue higher here sometime soon. HYG, high yield corporate bonds. Well, we did wind up getting below this low from back on February 13th, and we actually did close below that on Thursday. I think that's really significant in the fact that we actually closed below it on the weekly time frame. This is the lowest weekly close that we have to go back to early, kind of early-ish December. I could see high yield corporate bonds kind of dropping off. That would kind of coincide with yields going higher as well, and that's not even just talking about the quality side. I'm just talking about yield side. So yields going higher are going to push bond prices down, and if we start to see other things like deterioration of risk, obviously this will drop off probably a lot faster than the LQD TLT. Speaking of the LQD, well, yeah, we saw a pretty good breakdown this week on the LQD, and the TLT, we'll get to that in a sec. But yeah, pretty good breakdown. Probably just gonna look for a retest if you can get it. We might have just got it this Friday morning, as we did have a nice little gap up. I got nothing. I think we'll probably just see lower bond prices going forward. TLT, well, we're still just in this down channel as for now. I got nothing here. I imagine we probably just continue this down channel until, I mean, we're going to continue until we break it, right? So the fact that everybody sees these lower highs coming in, and maybe other people have this lower line on their charts, it's possible, but definitely this top one, people are definitely noticing. Like, we have 4 connections up there, so if we make it back up there, just expect there's probably just going to be resistance. Other than that, I mean, we are at the lower ends of the channel, so I mean, maybe we just kind of come back down a little bit and just kind of hang out. Not exactly great risk towards setups in the bearish direction, but it's very difficult to go bullish in downtrends because it just might rest and go sideways for a period of time. So I would rather just wait and see what it does, but TLT not looking great either. Okay, Lucy, let's take a look at the ETFs here. All right, so over the past couple of months, especially going back to the beginning of the year, we had this nice little consolidation here. We had the breakout of that consolidation, and this is the period of time where the Qs and the big tech guys, they actually started underperforming. They started lagging behind. There was a lot of rotation out of the Qs area and into a lot of other things, which is why the RSP started to perform pretty good. And for a while there, February, March, I said, it's the dash for trash. Like, people are now trying to look for the other things that are going to perform and stuff like that. And investors do whatever they want to do. It's just because they're doing something doesn't mean you gotta like it or trust in it or whatever. But we did form out this little head and shoulders type pattern. We got this little retest. We even got like a multi breakdown here, but we definitely clearly broke down some necklines, support, trends, all that kind of stuff here over the past 2 weeks, definitely this week, and that is not looking good, my friends. So that is, most stocks are breaking down like this ever since the beginning of April. And if we figure out where the 100, 200 are, we definitely have more room to follow. Now, one thing that's very interesting here on the RSP is right here where the 100 is at. And maybe we get there early this next week, maybe, Monday, Tuesday, possibly Wednesday. Well, that's right where these tops were, where we consolidated there second half of December, January, beginning of February. So, makes sense. Probably looking for a breakdown to come down under 160 or under 159. So, there you go. That's what I'd be looking for. Don't be surprised if that does happen. I mean, will it continue at the pace that we did on Friday? Probably not. But just be very understanding that that's probably going to happen. The DIA, the Dow Jones Industrial Average. Well, I'm going to leave the 100 and 200 on. I don't typically do that as we look through these, but since we're breaking down some moving averages on a lot of these charts, this will give us perspective of what the next levels are. The DIA hitting that 100 here. It's kind of a tough one. I'm not gonna lie, because as we just saw with the RSP, it's kind of in the middle of no man's land. It could definitely just keep dropping, which I'd imagine the DIA is not going to just hang out here for a few days while the RSP drops. So I would imagine the DIA probably does drop, and that's probably going to factor in, hugely on what UNH is doing. That is the largest weighting on the DIA. So take a look at UNH and figure out what you think that one's doing right there. But we do have a little bit of this little consolidation that we had back in the beginning of January, beginning of the year. So we're going to have that support level. Then we also have the lower ends of that channel, about right there around 372. And then just below that, we have the previous all-time high. So all the way down halfway to the 200 moving average, I mean, you got different levels of support. So that's what's going to make the DIA kind of tough. Even if you think the DIA is going to come down to the 200 moving average, the next few points is going to be pretty tough to kind of get through. There's definitely different support and resistance levels in here. It's not going to just be a clean shot. But if you get through that 369 type level, yeah, next one's probably just looking to come down to the lower 360s. So other than that, DIA not looking too good here over the past couple of weeks either. The IWM, well, we know that it has really not been all super strong over the past several months, even past 2 years or so. But I would rather be more exposed in the IWM area. I've kind of made it clear I don't think a lot of these companies have massive amounts of debt. Mostly because I don't think they don't have access to the debt market like bigger companies do. They already have to pay a premium, or they have to pay a premium to bondholders because, well, I mean, they're not as credible as like big tech stocks and big blue chips. So they don't typically take on a huge amount of debt. So if you can find those companies that are growing the company without increasing the debt, that's organic growth. That's what you're looking for. And, they're out there. Those will be the next big ones. If you can find those ones that are having really good organic growth. A lot of the big tech stocks that we'll get into the Qs here in a second. A lot of the thing about their growth over the past 10, 15 years, well, they grew a lot by issuing really cheap debt and very low rate bond market environment. So these companies haven't really had that privilege, and if they know how to grow the business, they have great products, they'll do good in a high interest rate environment, which would be more of an even playing field with the big guys. Because now if we're going to a higher interest rate environment, well, the big companies that have all that debt, they're going to have to reissue at a higher debt, which means they're going to have to take on more debt or pay it off. So yeah, I mean, there's definitely different scenarios that's going to go on at the big blue chip level. But these smaller guys, they don't have that issue. The issue that they have is basically growing. Not saying like all of these Russell 2000 stocks are going to be winners, because they're not, but they do have some opportunities out there. They do have some opportunities. I do like a few things here. I mean, we got a kind of a sideways moving, 200-day moving average. I mean, it hasn't totally just on an uptrend. It's kind of sideways here over the past year. Got a little bit of an uptrend here over the past couple of months. But yeah, I mean, it's prone to get its face ripped off every now and then, especially if yields really rip it higher, like they did on Wednesday, and this thing got its face ripped off. It gapped down and just had a pretty bad day. How much was it down that day? 2.6% on Wednesday. So I like the IWM. It's probably gonna be prone to days like that where it just gets its face ripped off. And it also kind of happened there on Friday as well. But people are gonna go to the secure thing, and I would rather go into probably some of the more risky things, because I think people are about to go into really, really risk adverse, really secure type things. And I think those areas, in my opinion, are already hugely crowded, right? I mean, think about what we just saw over the past couple of months, where we saw some rotation out of tech and into the RSP. It was kind of clear that we were seeing that. But yeah, I mean, the big tech guys, they're crowded. So that's just kind of my perspective. But taking a look here at the Qs, you can see from the beginning of March, we haven't really gone anywhere on the Qs. Maybe we are forming one heck of a rounding top here. Maybe we start to break down. Outside of Apple on Thursday, I mean it, the Qs would have got smoked this week. The Qs would have had a breakdown below that 50 EMA, but Apple, real quick, saved it huge on Thursday. Look at that move there on Apple, up over 4% on Thursday. Even got a nice follow-through day there on Friday, and that really helped the Qs big time Thursday, Friday, from just kind of falling off and looking like what the SPY looks like. We'll get into that here in just a sec. So the Q's not breaking the 50 EMA quite yet, but I mean, we have big tech earnings, not this next week, but the week after here in 2 weeks, and we'll see what happens. It's going to be do or die time for all these companies that are trying to make bank, like Nvidia's making bank on AI, but they're not. That's kind of where I think the market's going to start to say, hey, y'all are spending billions in this area. We want to start to see returns, and the market's priced very richly. Like all of these companies are going to be like Nvidia, and honestly, we've only seen Nvidia, TSM. We started to see some Micron bullishness last quarter, but that's been about it. That has been about it. So there hasn't been a lot. All right, taking a look at the SPY. Not quite breaking down that 50 EMA, but we are getting really close to kind of at least interacting with it, bouncing off of it. So we'll see what happens here over this next week. We might get into a situation here this week where maybe we just kind of bounce in between, sideways, where the 10 and 20 kind of coming down, the 50 kind of evens out here, and we kind of just get compressed, and maybe we drop off. We're going to be in an earnings week, so we should be getting plenty of stock movement. And if it's all bad, then yeah, we'll be breaking down. But I couldn't imagine it's all bad. I think earnings are probably still going to be good. I just question if the growth areas are going to live up, because that is what has put the market in such a rich area. So that'll be the question: is do growth areas live up and deliver the growth? Alpha Hunters, have a great and fantastic weekend. And we will see what the market gives us next week as we continue probably on with airlines, financials. Definitely going to be more financial earnings. So have a great weekend. Take care, Alpha Hunters.